Next on the hit list is market breadth. So heading on over, of course, this is obviously extremely concerning. We never really want to see both short and medium term above 80. It's very dangerous. It's interesting how this W'd out, though. So if anything, ironically enough, market is pointing back higher. We had this weak sell signal on the S&P 500 here recently. The market broke, and now we're ratcheting right back up top. Remember yesterday I did that lengthy rant in the I think it was here in the Broiler Chicken show about Apple. I don't know exactly where the hell the damn top on this thing's going to be. I mean, does anybody? We talked lots about, gaps needing filling. So that gap's still a little bit higher. Trend line sure ought to be tagged. I mean, you can see we haven't hit that even the trend line yet. There's 88.6. There's the original M top from the previous cycle. You could even argue there's a little bit of a gap right up top there. And the market opened up the next day down here, right? And then tried to rally and then puked out. So point being, I could see a bit more uppy here. And we, for whatever it's worth, if you're not familiar with this, try and remember, folks, we are in actually, and actually this would be a good trivia question. I don't know whether we can do trivia questions in the daily brief, but what do they call this particular part of the year? The summer doldrums. Hey, nice job, Cole. They also call these the dog days of August. Most professionals, I've told you this before, most professionals are not on Wall Street right now. They are off in the Hamptons. They're off, whatever vacation destination du jour. It'd be interesting to see where people are living in Georgia, where they go for vacation. But, like here in Canada, I would say a lot of people have left Vancouver and they're up in Whistler, Jekyll Island. Good comeback. All right. So the point of the matter here is from a breadth perspective, understanding that it looks like we're still pointing up. We're in this dog days of summer. Unless we actually have like econs that come out, which interestingly enough, we've even had some pretty nasty econs. And I think this is almost just like, well, the market pivoted back to the upside, and it's going to take some time to roll over and break here. And you can never know exactly when this darn thing is going to break. What I would say is we are in a very, very dangerous. All right, interesting. Nicholas is saying very similar to February to May, and then it was a sell in May and walk away. As just an example of a typical. We could probably do the same thing with the other Mr. Nancy stock, right? Microsoft. Same sort of thing. I mean, where is the top on this thing? I don't think the top is for another. This is $290. We could easily rally another $20 here. Yes, Willie is stupid. So if you buy here, you're a doofus. Do we have the actual confirmed bearish divergence here in MACD momentum? No. Do we have a breakdown in OBV or RSI? No. So this thing, and if anything, you guys have heard me talk about this pattern before. Well, you can see, boop. Oh, that's not what I wanted. If we go, boom, boom, boom. Try and do this quickly. There to there, there to there, there to there, there to there. Don't know what the hell the name of this damn thing is, but I've seen this so many times in my career, it's ridiculous. So I think that's what's happening here, and it looks to me like we're probably going to go up, fill in these gaps. Hell, this son of a might even go up and fill these gaps up here. And there's where your top comes in. So especially on the fact that the oil market is breaking as hard as it is. Because remember, we talked about this in the past, oil and tech stocks usually move in opposites.